Welcome back, everybody, to another episode of the Crypto Conversion Podcast. Before we get started, I just want to recommend that everybody like this video. Please subscribe to the channel. We're building this thing out. We are coming out with new episodes regarding how the church can continue to get involved in the Web3 world. And the best way to do that is to have Christians like Connor, Matt, and I have these conversations about what's happening in the space. So without further ado, as always, I'm your host, Brandon, and my co-hosts, Connor and Matt. How you guys doing this evening?
Doing great. Thanks for asking.
It's St. Patrick's Day today. So, happy Saint Patrick Day. I'm wearing green. I was joking with Connor, Matt earlier that if I were to take off my sweater here, I'd be wearing my Vladimir Zelensky T-shirt because of the shade of green. I am not dressed up like Vladimir. I am wearing green for St. Patrick's Day for clarity. So we'll just get that out of the way. So
yeah, I don't know if it'll come across. It's kind of a light green, but this tie is technically green. I don't know if you guys see that.
Okay, very very festive. Yes.
My green, so.
Yeah, everybody
only green thing I own.
Enjoy your Guinness. Enjoy your green beer. Enjoy your Irish car bombs this weekend. It's all fun. St. Patrick's Day weekend. Most people celebrated last weekend actually, which really confuses me. But don't ask me. All right, so let's get into it. We've had some crazy things happen the past week in the crypto space, but not just crypto, in TradFi as a whole. Just the shutdown of SVB banks, and not just SVB, but two others. We sealed the deal with them as well, with Signature and Silvergate. I'm just going to leave it open-ended because I can kind of answer questions regarding this, but I just want to hear other people's takes on it because I have my own, but I would just be drawing people out and boring them with my platitudes. So let's just start. Connor, what was your thought on all of this? It kind of hit us out of the blue on Friday as in the middle of the workday. So what were your thoughts on it?
Yeah, I definitely kind of sidelined. I mean, hit us, from the side, I guess. But yeah, I think the well has kind of been well spoken of on Twitter. There's been a lot of views and information out there, and it's really hard to sort through and figure out exactly what's going on. One thing it definitely does show is that there are systemic problems in the banking infrastructure that a lot of people didn't realize was there. And it's not just related to inflation or the Fed monetary policy. It really comes down to the institutional way these banks are run and the kind of risks that people don't fully realize that banks take on with your money. So crypto people, Bitcoin people have been sounding that alarm for quite a while now. And so not that anybody's, celebrating this kind of loss.
No.
But it's definitely a narrative for crypto. And I think that's probably part of the reason we're seeing the Bitcoin spike, particularly. There's some other reasons for that. And, and this is the other thing too, like it doesn't just show the problems with the banking infrastructure. It actually showed a little bit of the systemic problems in crypto right now with stablecoins, with USDC, right? Mm-hmm. So yeah, I think the other side of the Bitcoin run is people getting out of those types of projects and getting into more serious decentralized crypto projects.
Yeah, and just the whole thing is just so bizarre because as I was going to bed on Friday night, Circle released their statement regarding 25% of what they have was caught up in this SVB debacle, and they had a sizable portion of their reserves in SVB that had now been basically compromised due to SVB being shut down by the FDIC. But then we found out that everybody was going to be made whole on Monday. So I think that the printing of more dollars is a part of what is causing this bull run right now. I think it's a portion of it. I don't think it's the whole, but I think it's part of it, because we've seen when more money gets pushed into the economy, Bitcoin, Ethereum, at least the top tier projects, they kind of ebb and flow as the market does as well. And that's just something that's interesting when it comes to the cryptocurrency markets and the relationship with TradFi, that they still hold together. I don't know if they'll ever necessarily break off and be their own, but at the same time, though, it's kind of helpful that they do follow the markets, because it does kind of provide an element of trust too in the predictability of them to a certain extent, but they're still volatile in nature. I'm just still trying to wrap my head around all of this. Matt, I guess what did you see coming out of Friday with some of this news?
Yeah, I think, and kind of touched on this. My most important takeaway is that the vast majority of Twitter did not know what they were talking about.
No.
And there was a lot of panic, and I don't know for sure whether it was panic from the persons themselves panicking, or people trying to incite panic for ulterior motives. I think there was a little bit of suspicious behavior going on with certain accounts, and so it was so hard to trying to weed through it all and find the level-headed takes. So Brandon, you said 25%. I thought it was like they only had Circle, and they had about 3 billion of their assets on.
It might have been that, but people were saying it was 25%. So there we go. Following the weeds. You're probably more right than me.
So because that's why it was.
It might have been 25% of their cash holdings.
Oh, that was it. Yeah. Yep. No, I think that was it. Yep. They have a lot more.
So I did have that percentage then right a little bit.
Because because it's not, they don't hold. It's 1-to-1, but it's a diversified portfolio. So 3 billion, I think, was like 25% of their cash holdings.
That makes sense. Yeah. So they have things in cash because it's more liquid. I think they do buying a lot of treasury bonds so that they can kind of earn a yield on the stuff they're holding. And so so being 3 billion, it was a little less than 10% of the entirety of USDC. And so that's why I think it was trading, in the low 90 cents, because people were saying, oh, they lost that. So really this is only that. But even then there were so many takes that were like, oh, why is everyone assuming they're going to get nothing back from SVB? Typically, like we could expect reasonably that they'd get at least 50% back, or that they'd get, gosh, it was just, I hated it. It was, but I loved scrolling. I'm one of those guys who I like looking at things that make me angry sometimes. And so I just had a rage fueled scroll of Twitter, which is great. But yes, there's so many things. I don't know what I want to touch on first. The this cash flow thing as well. So there's kind of two things to this, right? So SVB, my understanding of it from what I've been trying to read, they technically had more in assets than they did in deposits, right? Like they didn't, invest in something at the top and it went down, right? But it's that they were illiquid, that they got kind of locked into these, 10-year things that, became less attractive. So really, I think if SVB, if nobody withdrew anything from SVB for, 10 years, then they'd end up with more, they'd have more in their hands than, people are depositing, right? It was a maturity thing more than it was
let's talk about the facts of what SVB is. So Silicon, so SVB, whatever their acronym is, Silicon Valley Bank or whatever, I get mixed up in. So SVB Financial Group, essentially they are the tech world's largest bank, and they specialize in giving very large credit lines to the future Facebooks and Googles of the world, is what I was told to think about it. And it's kind of funny actually because you guys were talking about evangelizing the people that are lending the money.
Mm.
After reading some of the profiles of some of these executives from SVB, they need a lot of evangelization. And I think that there was an element of we're too big to fail. And they overinvested in mortgage-backed securities, and what happens when you invest in heavily in mortgage-backed securities? Well, as inflation rises, your assets in mortgage-backed securities become riskier and riskier to hold. And so, because they were taking a loss on what they were holding, they had to sell it super fast, which then caused a lot of just frustration from the markets and what they were holding. And it's just kind of funny looking back at what these quote unquote financial experts were saying about SVB coming into 2023. They were saying this is a ironclad stock. This is a safe company to invest in. Everybody should be investing in SVB. They know what they're doing. In 2021, they were trading around $750 a share, and it was because they were getting an influx of money because money was cheap then, and all they were able to extend these credit lines to these companies, but what they were doing on the back end wasn't necessarily the best idea for overall health of a bank, and to put it in layman's terms. And Jim Cramer was talking about them being a solid investment. I believe Jamie Dimon was talking about them being a solid investment still. And they just kept dropping like a stone at the beginning of 2023. And it got out of the weeds that on last week, Friday, that they weren't allowing people to make withdrawals. And that's when this whole thing got to the headwind of what we saw. So that was just a very abridged version of the story. I'm not as financially savvy to tell the whole scoop, but there's plenty of people that are smarter than me. There's a lot of good articles out there, but I just wanted to just put it all out there in a simplistic story from what I understand, at least, is that SVB was over collateralized in mortgage-backed securities. They were losing a lot of money because interest rates have been rising very rapidly. They dumped what they had, and they took a big loss that they really couldn't afford to take, and then they stopped allowing people to withdraw money. So yeah,
So just to jump in, so
sure,
I think you said it wrong the first time, but you said it right the second time. So
sure,
mortgage-backed securities, essentially they own a bunch of mortgages that are, locked in at like 2% interest, right? Everybody either bought a house or refinanced their
yeah,
mortgage, while interest rates were super low. And so they're earning, a 2% yield, something like that.
yep,
And just with the Fed actually raising interest rates, now you can get a bond, which is a government bond, which is even safer, for like more than 4%
sure,
yield. Like there's just no, and so I don't know that they've actually sold. I kept seeing things that said unrealized losses, and it's the idea that like in
uh-huh.
order to get somebody to buy this 10-year mortgage-backed security that's locked in at 2%, they'd have to sell it for a loss,
They were
because nobody wants
that's
to
what
buy it.
they were doing. They had dumped stuff for a loss.
They actually dumped it for the
I
loss.
believe
Okay, because
so. Yeah.
I thought I saw the FDIC like kind of seized all their assets,
Sure.
and
So as they were dumping, the FDIC caught wind of it, and that's when they came in and were like, "You got to stop doing that." So that's what caused it. They didn't dump it all at once. They were beginning to do a very large dump of it, and that's when the FDIC got involved, and that was a couple weeks prior. And so there was already noise being made, but then Friday, that was the nail in the coffin where FDIC took over, and that's when everything hit the fan, proverbially speaking.
Okay, that makes
Now
more
there's a
sense.
Yeah.
couple things in play though, and I mean, and that is kind of what I feel like you were getting at, Matt, just being frustrated seeing all the bad takes on Twitter. But it's like there really is no like one take on this is what happened and this
Mm-mm.
is a solution. Like there's so many things in play. Like on one hand, I can see the viewpoint about they're a bank, they were the 16th largest bank in the U.S. I think, um, and
Some are
you know,
it's Connor, and that's even gray area to say. I've seen people say 16th. I've seen people say
yeah,
8th.
right, yeah, true. But yeah, so you say they thought consider themselves too big to fail, but I've also seen people, you know, just pointing out that really what you see right now happening in the banking industry is a consolidation of banks. And I forget some of the figures I've heard, but just over the past 10 years, like the amount of banks that we've had has greatly diminished because you see a few big players, you know, Chase, obviously J.P. Morgan being the top dog, kind of swallowing up all of these smaller banks. And some people are suggesting that that has an amount to play in this as well. I'm really not on SVB's side in this battle. I just because I really don't agree with the banking industry as a whole, and you know to what extent I want to see smaller banks succeed at the expense of larger banks is not really that great, honestly. When I look at my you know my alignments, but
Can you say that again? You said you don't like to see smaller banks fail at
no,
the
I
or
no to say like to what extent that I would you know have to side with smaller banks uh,
Mhm.
in this battle against the banking industry. Like I can't really say that my alliances are there because it's I can see that viewpoint to some extent, but also I don't like it's not. I'm not on SVB's side. Like I don't consider
Mhm.
them like necessarily my friend in you know in some of the things that I find valuable, both in crypto and you know like you said looking at these people that are actually running the bank, like they don't really have any sort of alignment with me, you know, spiritually either. So I don't think I can take that side, but I have seen people point out that it's not good to see small banks like this fail while the big ones, you know, go on basically, because something about SVP is it was a crypto bank. It was a bank that was supporting you know certain crypto industry, and
Mhm.
then after SVB went down, well, you had Silvergate beforehand, and then you saw them go after Signature Bank, and it didn't look like Signature Bank had any sort of insolvency at all.
Mhm.
So that's a very curious case. It does look like there's some attack on the crypto industry in general happening here.
Mhm.
There's an attack, and there is a guest on the Bad Crypto podcast this past week that was talking about um uh somebody, a representative from the SEC, basically went to Congress and told Congress, "I know a way to get you another $1 trillion,"
Mhm.
and it was by going after investors in crypto and banks that try to meddle in crypto by taxing the just taxing and taxing and taxing. And uh, I just heard this briefly. I haven't listened to the episode yet, but I caught a good portion of it, and I need to dive in further because this guy seemed to know what he was talking about at a high level, and
Mhm.
it's something that I'm intrigued with ultimately in terms of what the government's plan is essentially with crypto, because we're seeing right now kind of a war between the SEC and the CFTC in terms of who gets to regulate and run the crypto industry. So I personally would rather be regulated by the CFTC with crypto, but Gary Gensler seems to have his claws in deep with regulatory moves in the crypto space.
Mhm.
Yeah. Before we go on to keep talking about banking, just to throw in
Sure.
here, um, you know, again, stable coins, we started talking about USDC a bit, depegging. First, I want to be upfront and apologize. I definitely talked up DAI in a few other podcasts, and luckily, we don't have that large of a fan base. I hope nobody none of our 20 followers, dumped millions into DAI and then sold at the bottom. But we found out that they were not as decentralized as we hoped they'd be. It appeared. So just to clarify that, so DAI also went down. I think there was in the contract, they said USDC is a stable coin. So we're not even going to, use an oracle to check the price of USDC. We're just going to always treat that as a dollar. And so people were, using USDC that was trading at 90 something cents and then using that as collateral to mint DAI and then sell it. And then I don't know what they ended up buying, after that cycle. But anyway, so that's why one brought down the other. So we definitely, it's hard, right? Because those would have been the two I would have trusted, right? I think Tether is a little, suspicious. People always have suspicions about Tether. I couldn't get into specifics, but people always are suspicious about Tether. And so I would have trusted USDC as a, centralized one. I would have trusted DAI as a decentralized one. And it seems like we can't, and so I hope someone comes up with a better decentralized one. But until that happens, and I know there's just so many out there that, are trying to be the next big one. And I can't talk about all of them because I don't know about all of them. But yeah. So anyway, I do think this is interesting, right? Because if I still want to, I could go the crypto route and have stable coins in my wallet and say, I'm going to bypass the banking industry. But now I can't because they're tied together too much. So I don't know. That was definitely a thought I've been wrestling with the last week.
Did Tether come out more trustworthy to you after what happened last week?
No, I just don't trust any stable coin now.
Okay.
I've got some BUSD, I think, and I still trust them because they're set. But they're put out by a company in New York, and it's just that the government said they can't mint any more BUSD, so it's gonna die. It's gonna disappear just on its own. But I don't know.
It's funny. I have ever since I got into crypto, I've been hearing the warnings about USDT, and it wasn't the first one to go, was it? Not mentioning names, but I did read on Twitter somebody took out a short against USDT against USDC on the idea that USDT would possibly depeg, and so the short, how do you say that? The collateral is USDC? I'm not really a trader.
Which one were they shorting?
They were shorting USDC
against USDC.
Okay.
And they've been doing this for, I don't know how long, years probably, just on the off chance that USDT did go. But it wasn't the one to go, it was USDC. So the short was underwater because it went the opposite way.
That's hilarious. That's hilarious.
I've seen people do vice versa though too. So I mean, like, there's plenty of exchanges that allow you to do it. The question, and honestly, with what's happened in the crypto space the past year, if you would have shorted some quote unquote stable coins, it would have been a pretty good short. So take with that what you may, I guess. It's not as stable as we think they are. That's for sure. I mean, yeah, USDC on Coinbase, you'll get dollar for dollar back. That's probably the most consistent you can get. But I mean, shoot, Coinbase lost a lot last week, probably because everybody probably was taking their USDC off of Coinbase. Some of the people that I'm fairly close with, and we talk about this stuff, were taking their USDC off of Coinbase just to get dollars back into their bank account, because if your USDC was on different exchanges, you weren't necessarily going to get that dollar back. I don't know. Is USDC back to $1 now? It probably is.
It is, especially because SVB depositors were,
made whole.
They were made whole. Yeah, at first they were promised to be made whole, and then they were made whole, and so there's no shortage of dollars now.
Okay, so let's get into the topics today, Matt. We're I mean, obviously we already are, but let's get into some of the questions about stablecoins, but also like how stablecoins could be the next CBDCs, and and things like that we've kind of been discussing lately or hearing a lot about in the news. Certain countries moving over to CBDCs. We know China has already. We talked about Nigeria a couple of
Mhm.
weeks ago. South American countries are moving in that direction, and there's websites tracking this stuff now too. A CBDC tracker from Atlantic Council and other things like that. So let's get into it.
Yeah, so I think there's been a kind of a lot of refueling of this discussion with all the banking stuff, because the government is really putting its hand a lot more in the banking system, even more so. Gosh, and it's interesting. I was young in 2008, so I kind of understood that things were bad for banks and they got bailed out, but I didn't really know what that meant, the way that I might now. And so it's definitely different, right? They're not, they didn't bail out any of the investors of SVB, they just bailed out the depositors, but in doing so and kind of guaranteeing that for now everybody, if FDIC covers everybody, every deposit, and every bank, it sounds like the government runs the banking system, right? Like I, I don't know. And so I think that kind of refueled this discussion. If the government, if all the banks were nationalized, I think we'd have to, call that, well, not CBDC, right? Because the D is the digital, right? But if they, processed every single digital payment, if they held everybody's accounts, it's just semantics, I think, at that point to not, I suppose the one thing would be to get rid of cash so that people had to transact digitally. But yeah, besides that, I think it seems like we're inching closer in certain ways. And so,
Yeah, Matt, and I think, it's interesting, and here's something to highlight. One thing that I had been kind of tweeting out and preaching, it's definitely not my own words, but the thing about banks is that everybody in 2008 got bailed out. Like nobody, no, like that's the thing. Like everybody at SVB, they're getting bailed out. Nobody's getting their wrist slapped for making a stupid decision. Which is part of the frustration with it, because the banks do a great job of privatizing the gains and then socializing the losses. So
yeah,
the banks can basically do whatever they want, and when they're profitable, they can rake that in and keep it amongst themselves. But when they lose, that's when it goes back on everybody else's shoulders to pay for their malfeasance and their poor decision making. And that's just something that I wanted to start as a prerequisite. So the government, in turn, by taking more and more control over the banking system, this is just a way for the government to privatize the gains, continue socialize the losses amongst the populace.
yeah.
And it's not it. I don't know. There's not like a perfect way to say that, but it's kind of the truth. And Matthew Crater, Trader University, he's the one I heard that quote from. It's definitely not my own, but it's a great philosophy, and it's true. It's the truth.
So I don't think they did that though, right? As far as I understand, like any SVB shareholder is at zero. Like they only made the depositors whole while still shutting down the bank.
Yeah, but the biggest shareholders sitting on the C-suite sold their stock a couple weeks ago before they got delisted.
Yeah, but I think they'll get gone after for that. I think they'll say that was bad, and they might have to recoup those things and put them back in the bank. I don't know. I think
We'll see.
We'll see. We will see. But I like the 2008 bailout again, as far as I recall, because I was young back then. But as far as I recall, they bailed out the banks themselves. They said, we don't want these banks to fail. But this one, SVB, they said, okay, SVB, you failed. But we are going to make everybody, all the depositors whole. We're going to make sure that everybody who had money there. And so that's why you're seeing bank stocks go down. I've seen a few, I couldn't name all of them, but I've seen a few that are trading a lot lower now than they were, a few weeks ago, because now you're not doing that. I think everyone was worried about privatizing risk and socializing losses, but now the government, the FDIC is trying to say, no, we're not doing that. We're going to only bail out depositors. And so now people who are holding are like, okay, well, like there's just so much risk here. Like I'm not going to put my money there. That's what I've been seeing.
It's still a socialization of the losses, though.
Yes, but it's not in a way like it's not recouping anybody who owns stock in the bank. Like they took on the risk and then they failed because of that risk. To be fair, when you open a bank account, like I honestly, I'll stick to this. I think the government made the right decision, and the FDIC made the right decision based on what they want to happen. Right? They don't want bank runs. They don't want every bank to start collapsing right now. And so they said, no, like we're going to make sure, I don't know, maybe they could have done it slightly differently. Maybe they said, hey, up to $1 million instead of 250,000 or up to, something else. But they said everything. And so they want they want the everyday person and every business to feel secure in keeping their money in a bank, and being able to use the payment infrastructure and everything, they're trying to avoid a bank run. And so I applaud them for that, because I think they made the right decision there. I think this is having more ramifications, and that's what we're seeing in this discussion about CBDCs, is that I think there's bigger ramifications of what they did. But I don't know. I couldn't have made a better decision if I was sitting at the table.
And I guess this is where you and I kind of differ in some of this, Matt, where I'm like,
I was going to say the same thing. I was going to say, I take the opposite.
You know what? If the government wants to come in and bail out banks like that, then the government should just be the bank. Like, honestly, let's stop beating around the bush here. Like, just take over the banking infrastructure, and the only way we can bank is through like a one government bank. Like at this point, like then don't let banks make decisions in terms of where they put money and what they do. So I respect what you're saying, and I understand, I don't want to see the little man get raked, but at the same time, I just want to see somebody get some form of justice. And I know that justice never happens in this life. It's the next, but it's still, it's still one of those things that just runs in my head since what happened in 2008. And as I familiarize myself with what happened in 2008 and see and you and I've talked about, the inequality of the banking system as a whole, but it's still just one of those things where it's like, if nobody's ever going to have to pay the piper, because FDIC just comes in and just makes everybody whole, and it's like, what's going to happen now? And SVB apparently had somebody that wanted to buy them, but the FDIC said, no, we're not going to allow you to buy them because we don't want monopolies to be created. And it's like, what? Like, that's where I get confused. Yeah. That's where I get confused. Have done that. Yeah. And like,
Connor, I want to hear you jump in. I know we keep going back and forth. What would you have done differently? Why am I wrong?
You are right though. Like there was a considerable difference in how this bailout is, being run, I guess, from 2008. So it's not really fully socializing the losses, right? Because like you said, it's not they're not bailing out the people who are actually invested in the bank. They're not bailing out the bankers. They're bailing out the people who held money in the bank. But it's just, so people are calling this quantitative easing, and it's like, well, it's not really quantitative easing because the policy is not the same. Yes, but the effect is the same because you're still putting money into the system. You're adding money to the system. Okay. And so like, it's slightly different the way it's being done, but that is what's happening. And we're in this point where we're supposedly trying to combat inflation. So what does it mean if you're combating inflation? You're making it more and more difficult, for these types of institutions and venture capitalists to make money, and then they start failing, and then you put money into the system. Like, what are we doing here? Like, what's the point?
Thank you.
Right?
Yep. Thank you.
So the only reason I say they did not make the right decision is because I very much think we just need the system to fail. So, and I know like that can sound really disastrous, but yeah, people do have to realize that, keeping money in your bank is a risk, and you have to accept that risk. And also, most of the people that were frankly investing in SVB or holding money in SVB were not like little men. They're venture capitalists. And some people are claiming, I mean, this is possibly conspiracies, but if you know your bank is failing and you know there's a possibility about getting a bailout, you know, you want to be first in line to benefit from that. So I'm not saying that's what happened here, but really the only reason I'm taking the opposite stance about they shouldn't have done the bailout from you is just because I think we need the crash to happen. And you know, yeah, I think you can manage a lot of how that's done with tone and you know with rhetoric, because you know, crowd psychology is crazy. Honestly, people do not behave rationally. You know, everybody's going to say like, oh, if the Fed raises rates by 50 basis points next week, then it's going to be a massive crash. And it's like we've been seeing 50 basis point raises for
Yes.
weeks, you know, for months, and it's like, so this next week, if we see a 50 basis point hike, the whole system is going to crash. Like that's absurd, but it's probably true because that's how crowd psychology works. Everybody's now accepting or expecting either a 0% rate hike or maybe at minimum a 25% basis hike. So now if it's like 50, then it's like we're done. Come on, you know. So people need to kind of be prepared to accept that things are going to come down.
I think though, if you didn't bail out those depositors, if FDIC said no, we're keeping this strict limit, gosh, I don't know. And really, there is a process, right? So if they would have followed the normal process, everyone who had at most 250,000 would have their deposits, and then they'd kind of auction off all the assets from the bank, and then people would be made whole, you know, which is also a fine process. But I like if they said, nope, screw the depositors, like I don't know, like the logical next step is anybody who has more than 250,000 in a bank account, you know, any business who's using a bank is going to like take that. I think the populace needs like, they need a place where they feel safe putting their money. Right. Like when I put my money in a bank, I don't think I'm investing in this bank. And if this bank falls, I fall too. Like, I think I'm not holding, you know, stacks of cash under my mattress. Like I'm going to put this somewhere safe, you know, and maybe that's the point. Maybe there's nothing safe in this world, but people need a sense of security there. Right. I mean, like you guys all said, you know, you bought, Brandon, you were talking in the first episode, I think, where, you know, you bought a ledger because you want your Bitcoin to be even more safe, you know, and it's like, I don't know. People, I think we need to feel a level of security, right? I'm just worried. I would be worried if, again, and I said this from the perspective of the government, right? I think they made the right decision for their, you know, their motives, right? They don't want, that'll be a disaster if every bank starts falling because every bank has a bank run because nobody feels safe, you know, risking their money in a bank. I don't know. I couldn't see that going the opposite way. I couldn't see anybody in the government saying like, nope, let everyone know banking is a risk. And if you want to keep your money safe, take it out of the bank.
Even like from 2008, like just things have, they said things got better. I just don't see how that happened. Like, I just think they've been trying to keep this thing put together with chicken wire and chewing gum since 2008, and it's just the fix that works. And the only reason why nobody comes after us for it is because we hold all the leverage as the global superpower. That's all. That's my TED Talk.
Yeah, well, and the other thing too is now the expectations have changed because, like you said, if they didn't, then you know everybody's going to be concerned, and there's going to be the possibility of a bank run. But people were kind of already preparing for that before the Fed made their announcement. Like we didn't see massive bank runs on everything in those 2 days that we had. We didn't have much time.
I don't know if banks are always
maybe we
closed
would
on
have
Saturdays
maybe
and
we
Sundays,
would have.
but yeah.
Yeah, no, I mean you're right. Maybe we would have.
It was
what?
just the weekend. Like it was Friday to Monday, or like I
Yeah.
think they announced the Fed announced on Sunday.
Yeah, we had like
Well,
2 days.
Coinbase shut off all USDC movement on Friday as soon as Circle made their announcement.
Yeah.
Yeah.
Yeah, exactly. But it's just now the expectations have changed because now people are preparing for that contingency because they know the Fed's gonna have
Yeah.
their wallet, right? So it's changed the playing the board game a little bit in such a way that it's like I don't even know what the solution is now to get out of this trap. Like how is inflation going to come down? Like it doesn't make sense in my mind.
Yeah.
Fed 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 Pro coming to you summer of 2023.
Fed now. If
Fed
that's what you're
Now,
talking
I'm
about.
sorry.
Yeah.
Fed Now, Fed Pro, whatever they want to call it. Basically getting Swift in the United States. It's all good.
Wait, do we not have Swift?
The United States?
Yeah.
Not to the extent that Europe does.
Is Swift run by like the European Union?
Yeah, I'm pretty sure it
okay.
is. Yeah.
Interesting. I didn't know. So I was interested in the Fed now stuff. So this is I do think there's a few things going on here. I was reading about Fed now. It's a payment processor like that the government's going to run, and I don't know. I think there's a couple of courses it can run. Right, this could be laying the groundwork for a CBDC. Right, if government not just does the payment processor, but then they decide, oh, we're gonna host everyone's account. Then CBDC. That's where we're at. But also, I think some people are saying no. This is actually the optimistic approach is that this is going to bypass the need for a CBDC because we're gonna they're only getting into the payments stuff so everybody else can hold accounts elsewhere and they just have to interact with this and they don't have to interact with this. I think what I've understood is that it's now an option. I don't know. The optimistic take would be like this is the post office and people use, UPS for the premium, right?
Mm-hmm.
Anyway, sorry. I don't know if you guys have read about Fed Now or have any thoughts there.
It just feels
Yeah,
like
I
it's the
did.
government's version of PayPal.
Well, this is really what confuses me. Okay, with this whole CBDC stuff, it's like, what tangibly is the difference between the system we have now and this potential CBDC? Like, I get the argument. It will centralize things a little more in the into the central bank's hands, but the central bank really does run the show when it comes to the banking industry as a whole, and the government does like okay. The system we have now, like you're not going to be able to send money to North Korea. Your bank's not going to allow that, right? It's like
Yeah.
they're already controlling where you can spend your money, what things you can save your money in. All those transfers that happen are already manually approved. So, yeah, okay. What's tangibly the difference then? Maybe you guys can explain this to me because it's something I've been trying to wrap my head around, and it's not easy.
I think one of you shared this from the Nigerian president or someone in the Nigerian government said that the goal is to become 100% cashless, and so I think CBDC, to emphasize the D, is digital. To say, hey, we're going to force everybody has to, we only have a digital currency. This only exists. Right. And we control the network through which that goes and possibly all of the accounts. So that, and since Fed Now is an addition, right? If they control all of the payment processing, and then if the government also has like a wallet, like I have MetaMask, but the government, and it's just, my money and it connects to, the Fed Now.
Well, with Fed
would
Now,
be kind of the next step.
Yeah. I mean, it's a slight step, but it basically allows 24/7, transactions instantaneously. But it's transfers between bank, right? So that's one of the key differences between what a CBDC, hypothetically, a CBDC would probably be a wallet that you hold separate from your bank account.
Yeah.
Hypothetically.
Well,
and of course, there's multiple ways CBDCs can kind of form.
How different is a checking account though from a wallet that you hold?
Right.
So
if you have 24/7 access to it. So
a lot of people do have like two bank accounts though today. Usually they do one bank for their mortgages or, things where they get their loans from, and then they have their bank that they use for like, what they spend and how they pay for things. It's just how, where you can get the better rates and things like that. I think that that's where FedNow steps in. Is FedNow, they want to be that intermediary of exchange, of everyday exchange, where somebody might have use a smaller bank or a Wells Fargo. Everybody has their own personal opinions on how they do this. Just from the people that I speak to and deal with on a regular basis, that's how they do it, at least. But I know that there's some people can get away with using one bank depending on your situation in life. Everybody's different. What I get nervous about is this stuff gives me chills down my spine, because it just makes it just see the United States becoming more and more like China every day, and it scares me. It scares me from the sense that I could have I could come into a situation where I have to have my money on Fed Now, and if I do something deemed unsavory, I can be deleted like that, or and that's the part that kind of like just gives me the heebie-jeebies, so to speak. And I don't believe that
But can I,
FedNow and CBDCs incentivize people to budget, to save money, to build a future for themselves. China, they have their CBDCs, and people it incentivizes spending more than saving. People have to spend money by a certain date or else it gets deleted. Like, why should you be controlled in terms of how much money you can have in your bank account? And that's the part that kind of scares me a little bit.
but like, what's different about the system we already have right now? Like, if they decide you're a criminal, they freeze all your bank accounts. You don't hold your money in your bank. Like, your bank holds the money, and they answer
True.
to whatever the authorities tell them to do. Right? There's no like independent. There's no independent like depositor out there. Everybody, PayPal, Visa, your banks, they all answer ultimately to authorities. So like, what's the difference? Like, what makes you
yeah,
more scared?
and as Fed now rolls out, I believe they're rolling out kind of as a competitor to the current payment processors. You're right; they're not like shutting down ACH or Zelle or I don't know what other ones, PayPal maybe. You can call them a payment processor, but
Right.
not
So
the
is
same
this
way. But
this is like the health.gov version of payment?
sure. I
Okay.
suppose. I suppose. Yeah. Or I mean, I like thinking about the post office, right?
Yeah. Okay.
They made that from again, this optimistic side, right? The government made the post office to ensure that things were getting delivered anywhere in the country, and then you had private companies like UPS, FedEx, and they said, hey, we're going to do it better. And
Mm-hmm.
so I hope it's a good move. I hope this drives competition. That's the optimistic perspective. But then, yeah, again, the pessimistic is that
A new
they're building a
government coming,
framework
a government
to.
program coming in that's going to drive competition. I don't know about that,
I
but
just, yeah, I don't know, like that. Right.
it
I
just
mean,
doesn't
just
like, it
look.
doesn't tangibly
Go.
matter to me because the competition is not really real anyway. Like, I get it,
Sure.
but
Yeah,
in my
exactly.
mind, you
And
really
I'll
can't
just say
operate
this, like,
independently as a financial institution.
speaking from somebody that works for a company that sells a lot to government as a business, I I kind of, it's just frustrating in the economy when the government is a competitor to other, existing systems. It's like, why can't somebody else, why can't we have an industry that that needs a government version of it? You know what I mean? Like, why can't we have these systems that are not as compromised by government control? And I understand that that can lead to maybe something being more corrupt, but the government hasn't given me any reason to think that they're not corrupt either. So that's why I'm like, okay, like I can either trust, Jeff Bezos here, or I can trust the government. Like
Yeah.
it's just interesting to think about, because what Amazon almost did to take out like the need for the US Postal Service was incredible. I think that would have been like 2017, 2018. Amazon announced they were going to begin uh, building out their own delivery driver service.
Mhm.
And I trusted Amazon was going to do a better job of delivering their packages to where I needed them to get than the post office. And then the post office, the US, the US Postal Service stepped in and said, "Hey, we really benefit from your packages going through, and we really want to be a part of that. So if we can guarantee the 2-day ship for Prime members, can we be a part of this?" And Jeff Bezos is like, to comply with the government and to not turn himself into too much of a monopoly, got the post office involved in Amazon Prime, essentially. And now that's why your Amazon Prime packages are kind of victims to the postal service that delivers them, if you're not getting them directly delivered from an Amazon, like an Amazon facility. So sometimes I wonder, does it even pay for Prime when the postal service is involved, and I'm just a victim to the regular postal service all over again? So that's why I'm like, kind of like, having the government version of it, getting involved with private business, doesn't necessarily mean it's going to benefit the end users of the product itself.
Yeah, gosh, I don't know. And I hope I get, slandered in the comments as being a statist, but like, I don't think the post office is bad. I mean, they are bad. They're inefficient, right? I don't want to say corrupt. I think they're just inefficient. But they, like, to be able to ensure that everybody will have access to something is a good thing, right? I think there's
Mm-hmm.
certain, you see all those maps of like cell coverage from the different cell phone companies, and they never cover the entire country, right? There are certain rural areas that, are not covered. And so you almost want like a really bad, crappy government cell service so that, like, hey, at least everybody can get access to this, and then obviously, the competition will, once those people are on cell phones, then, businesses, when it becomes profitable, they'll say, okay, now we'll cover that area. Now we'll, try to take their money and do this stuff. But
Sure.
I think there is something to be said about, this equity, right? The postal service says, hey, look, we'll go anywhere in the country, rain or snow or whatever they say, whatever their motto is. But
As long as it
yeah,
gets sorted on time.
yeah, exactly.
Yeah.
But I don't know, and I don't know that I think nowadays, we see enough private companies that are shipping things that they probably cover every area, and they'll charge a premium to get it, something to the remote Alaska within, the week. But I don't know. I call me a statist. That's fine. But I think there's something to like certain infrastructure pieces for the government to say, hey, we're going to minimally do this, and we'll allow people to do stuff on top of that, but we're going to provide a minimal service to everyone.
Yeah, well, I mean, but then you run into subject of, a program for the poor is a poor program to begin with. So that's just something that, that I've heard, and it's kind of true. My problem is, just don't allow it to limit people.
Mhm.
You have to allow it to be an asset for people, because and that's the thing, is like, how can we use this as a driver to stimulate growth in the economy, create a future for people that they can be proud of, have a family, have a future, have something to look forward to. And that's ultimately what I look at when I'm looking at some of these financial tools that come in our disposal, so to speak. And that's what I'm looking for, is like, how does this stimulate growth into the future, and how does this benefit people for their futures?
Yeah. sure.
Right. So on the topic of CBDCs,
Yeah, sorry to jump back in there. One thing to get us back in the crypto space is again mentioning stable coins. USDT, USDC, I think DAI as well have in the smart contracts. They can also limit. They can have blacklists. They can also freeze people's assets. Right. So we look at crypto as this space where hey, I'm free from this system. Bitcoin, launched in the wake of the 2008 financial stuff. And so, yeah. So, what are your thoughts? I've been talking a lot, so I want to hear from you guys. What are your thoughts on how can people get out of? How can they opt out of a potential CBDC or even just the current banking system?
I think the first thing that you have to realize is that most of the dangers that you consider about CBDCs are already happening. Like there already is oversight. There already is, they'll freeze your bank. They already limit who you can send money to based on a centralized authoritarian standard, basically, right? So you don't have decentralized digital money now in USD. And a CBDC would just negligibly change that, in my mind. So what you have to protect is you have to protect decentralized cash. Not looking at the crypto space, you want to make sure that you can have cash so you can still have some sort of self-sovereignty over where you spend your money and some sort of privacy about how you spend it and where those transactions are going. Like you said, I think I pulled up out of that article the Nigerian Fed chair or Fed governor basically saying that I think he said the destination, as far as he was concerned, was to eliminate like 100% of Nigerian cash, which is crazy. And then also, I think you shared another article, and that was one of the Fed guys in South America was saying that one of the big leading driving factors about them launching this CBDC was to basically crack down on under the table cash transactions, right? So that's the real danger of the CBDC is that it can replace cash. And the reason payment systems can't do that right now is because of the way the infrastructure is set up, you need they can't offer basically 24/7 transactions, right? So that's the big one. And then two, also offline transactions. They can't offer that. So a CBDC kind of has to solve both of those problems. And that's what they're also looking at in Nigeria, at least, trying to solve the offline banking problem. So a CBDC that can do that could totally replace cash. And then if they want to eliminate cash, they can, which is not good for privacy and it's not good for self-sovereignty. So that's what you got to be concerned about. Now, if they launch a CBDC and cash still stays in play, I don't really see that a whole lot has honestly changed. So, but then your question about crypto, what was it? Oh yeah, so USDC, yeah, it's the same thing, right? Like they can totally freeze money in your wallet. They can blacklist addresses. They can tell you where you can save money and where you can spend it. Like that's crazy. So yeah, I mean that's a big question in my mind. Like if they want to eliminate cash, they basically want to eliminate self sovereignty and privacy, right? So if we allowed that to happen in the crypto space, if we don't support privacy on chain, and we allow basically these tools to be the de facto standard in blockchain, where they can just blacklist addresses and freeze your wallet and whatnot, like we can basically give the government everything they want in a system, right? Like we don't even need a CBDC. Like just USDC could be the CBDC, and it
That's
would
what
accomplish everything
USDC
they want.
wants.
You know?
That's what USDC wants to be, I feel like.
Well, I saw that clip running around Twitter of the bankless guys talking to what's the who's the people who issue USDC?
Circle.
Oh,
Circle, right?
Circle.
They were
Yeah,
talking
yeah.
to Circle and basically bringing that up. Like, yeah, let's make USDC what the Fed wants to use. And I mean, it's a little bit of a scary thought because
That's freaky. I'm gonna have to look up that interview that the Bankless guys had then, because they normally do a good job of squeezing some of that information out of the projects. So
Well, you can see why
Yeah,
people like it because it's like,
yeah,
oh, it's like this is what we're already using, and like this is DeFi, like this is a good thing.
yeah.
And it's like,
Mhm.
is it? Like, is this really what we want?
No. This also, it's funny, Connor. The only thing I could think of while you were talking about that is that this is just going to make US dollars, like cold hard cash, more valuable in those primitive economies for under the table transactions. You know what I mean? Like, because if they have their own, their money systems that they're using, they're not going to want to use that money system. What are they going to do? They're going to try to get their hands on as many US dollars as they can. And they're just going to use that amongst each other for peer to peer transaction or even crypto. So it's just interesting to think about that. Like, maybe this is what the US government's, or I don't know, the financial system's plan just to keep everybody on the dollar, is that they're going to keep cash in circulation while these other countries are going to take it away. I don't know. That's kind of a contrary take, but that's just something that I was thinking of while you were talking about that, Connor.
Yeah, no, I mean, definitely. I mean, USD. I think Matt even brought this up in a previous episode. Just the fact that US dollar is kind of like a universal currency everywhere anyway.
Yeah.
So you would definitely see that. But of course, if they do start to ban it and they say, hey, you have to like turn that all in for a CBDC, what's going to happen is people are going to stop accepting it. There's probably going to be a crackdown. It's like I can't use this, and that's basically how they eliminate it. So I'm not sure if the U.S. federal policy decided that they were moving away from cash. I don't know if it would survive. It probably wouldn't in my mind.
I don't think they can.
Hmm.
I mean, I think they can.
That's what I'm saying. If they start saying, "Hey, U.S. companies," it would be a slow, it would be a slow decision probably, but it would basically probably reach the point where it's like you can't use U.S. dollars, you can't deposit it in a bank, you know, and then certain federal agencies don't take it, and then they start to, and it has less use case, right? In that
Sure.
case, so.
I don't know. I imagine like I still do think it'll be slow to fade out, but I think they'll just be like certain like filter certain sinks where they'll say, hey, yeah, you can deposit this, but the bank's gonna like light your dollars on fire as soon as they, or like shred them right as soon as
And
they
people don't
deposit
even
it
like,
into your account, right? So
yeah.
that like, we're getting rid of cash, everyone's digital, right? I could see that happening.
People don't
Uh,
respect cash anyway. Like I don't think anybody's gonna try too hard to keep it around. So
I
Yeah.
don't know. I'm trying hard to keep my $2 bills around personally. I collect those bad boys. Got some valuable $2 bills in my collection.
yeah.
No, but I understand what you're saying. It just I don't know. I it just frustrates me to a certain extent, and I'm just trying to piece together what this means, how it's going to be implemented, and like I said when I was going on my tangent, like how is this going to benefit people for financial and economic success? We hear politicians on both sides of the aisle speaking these platitudes of, oh, I want you, Joe Smith, to be as successful as anybody in this country, and it's not necessarily going to happen. There is different opportunities aren't equal depending on where you are in the country. It's hard for some people, a lot of people figure out how to make the most of it where they are. But I just look at how many people are struggling today in certain regions of the country. Like, think about Detroit, Matt. Detroit used to be the richest country, or not the richest country, the richest city in
Yeah.
the United States with the automotive industry. And look at what happened. It's you, and you can probably speak to it more than I can, but they really lost what they had when the automobile boom was going on, right?
Yeah, I definitely wasn't around at the time, and there's different
Sure,
things that went into it. But it's crazy to see that it's fallen. I definitely a lot of revitalization. My entire life, I've been hearing people say
sure.
Detroit's overbuilding back, and I do think it's getting at least some parts are nicer than they were when I was a kid. But anyway, I will. to have a
you
whole
get what
nother
I,
episode on Detroit.
He's just
get what
dogging
I'm
on Detroit because he doesn't like to talk about his city there in Minneapolis.
I don't talk. I don't talk. I don't live in that hellhole. I'll be straight up with that. I don't. No. A lot of great people in the Twin Cities. I prefer to stay where I am, outside of that bubble. Yeah, but I just think it's just tough to see certain hubs start to centralize the wealth, and that the acquisition of it is not so simple in the middle of the country in certain areas because of whatever reason, poor decision making on certain businesses and things like that. And this is a totally different episode, but I just look at the central bank digital currencies as a way to just give more central monetary power to the the kingpins that be. But like Connor said, we're probably already there, to be truly honest about it. So yeah,
Yeah, it's just so hard for me to like really take that like stance, like, oh, we need more competition in the banking industry. It's like it's the banking industry. It's one thing,
yeah,
And I
Yeah.
get that there is different players there, but there's not that much competition. Like, I mean, PayPal, Visa, uh, JP Morgan, like if they decide to freeze somebody's accounts, they're all going to freeze the accounts. If they decide, you can't send money to so and so, you can't send money to them. And that happens. It happens today. There's
hmm
people you can look at, like US citizens who have not been charged with any official crimes, that you can't bank with them. There's no bank that will take them. And, there's no payment processor who will support their business. And it happens today.
Well, when I was buying my ledgers, my credit card was asking me, "Are you sure you want to spend your money on the with this company?" And I'm like,
Mm-hmm.
"Oh yeah, I'm very sure I do." All because it wasn't local. It wasn't in my purchasing region.
Yeah.
Because most of the ledger companies are over in Europe, so they already are doing it to a certain extent. Like it's kind of
Well,
funny
no,
actually.
I mean, they're definitely doing it, is what I'm
Yeah,
saying. Like,
no,
it's
it's just
definitely happening.
it's kind of funny. Like, and this could be a fun episode. Did you know that Delaware is basically where all the credit card companies um hold their control over all the credit card companies? They're based basically in the state of Delaware. Yeah, kind of an interesting. That'll be a fun
Must be some
side
good
tangent
incentives
someday.
there for it or something, huh?
What?
Must be some good incentives, I can imagine.
Yeah, I've
I
heard a lot of
think there
people like
is.
starting up LLCs out of Delaware.
Yep, yep.
There's
Delaware
something there. I
LLC.
don't know what
Yep.
it is, but
Yep. Exactly. Yeah. So,
um,
but that's another episode. So,
yeah.
Yeah.
yeah. Well, central bank digital currencies. I guess basically y'all got how we feel about it today. I don't really know what else there is to do. We'd love to continue this discussion, see what people are saying in the comments about this. How do you feel about central bank digital currencies? Do you think they benefit society? Do you think we're already there? It's a great discussion to have. Love to see what people are thinking about Fed now. And hopefully, this episode was kind of a springboard to that conversation, just to see what everyday people like us think about this and how it could affect us. So I appreciate you all for listening. Please like, comment, review, subscribe wherever podcasts are found. Download, rate 5 stars, unsubscribe, resubscribe, all the things. We appreciate it. As always, this has been the Crypto Conversion Podcast. And everybody, you have a great rest of your day. Peace.